Well, good morning, folks. Is today going to be Free Fall Friday? Now, despite the numbers that came out yesterday, CPI was a little bit better. Have a look at my Twitter notes on CPI and my video on CPI. A little bit better, way above 2% still, and definitely still not in a downtrend. And jobs were too strong. So fundamentally, we should see the markets begin to move lower. But beyond that, we're at technical resistance on many markets and support on others. And today might just be Free Fall Friday, as I said. Let's have a look at the stock markets quickly, and then we'll move on to currency markets and metals. This is the S&P. We're right up against this line. We saw a bit of a rally yesterday, but not very convincing. More like a hesitation candle, if anything. This was yesterday's candle over here. And today, we're still holding below this green rising trend line. We did manage to close above the 200-day moving average. Once again, I'm not too concerned about that. We've seen that before over there and there. We're still crucially below this purple downward trend line and the key levels at 4020, well, call it 4,000, 4,020, 4,050. Still below all of that and still very firmly in a downtrend. And we haven't even retraced back up to these previous highs, anywhere near them just yet. So my view on S&P and NASDAQ and Dow Jones is short today. Free Fall Friday. Someone coined that term. I'm not sure if it's been used before, but I like it. And funny enough, Fridays often are Free Fall Fridays. If we have a look at NASDAQ, same sort of thing. We rallied very anemically up after the stronger than hoped for jobs report and the very slightly lowered CPI, and just up against this 100-day moving average. Bit of a rally. Yeah, it was a 2% rally or something, but nothing really very impressive whatsoever. I'm short on NASDAQ, and the same thing applies to the Dow Jones. Although, if you're going to be selling stocks, I would say avoid the Dow and stick with NASDAQ and S&P. Dow Jones historically over the last year or two or so has been strong. We're not very far actually from the all-time highs still on Dow and not far from these recent highs. So generally a pretty strong index. And just look at the volatility over the last year. Unbelievable. Up and down like a yo-yo compared to the placid and peaceful and ongoing rallies of the preceding years. We saw a huge amount of volatility in 2022 and generally just a risky index to trade if you're going to be trading stocks and looking to sell short like I am on stock indices. I think NASDAQ and S&P are much safer. Let's have a look at the currencies. So before I look at currencies, the first thing I'm going to do is look at the DXY dollar index. Really, this is the key to many of what the things we're looking at today. Here's the dollar index. This line here, this red line where the pink ends and the blue starts, is at 101.50. Call it 101.5, just above the 100 level, which is slightly below over here. This is 101.5. Now, why is this a crucial number? Well, it's the 50% retracement of this entire move up since the late 2021s. It's the 50% retracement of this entire move up. That entire move took 2 years, and the move down took just a few months. So that's how quickly we've come down, how fast and furiously it's happened, and how dangerous it is to expect that this is going to continue in the short term, just endlessly, because it won't. Look at the dollar index over the years. You can see how it trades. You get to know the personality of different markets. This is the dollar index. It's a zigzaggy up and down sort of market. Yes, there's been an uptrend for the last 2 years because of various factors, stock markets, interest rates, and bonds, and all that sort of thing. But it doesn't go up in a straight line. It's very zaggy and ziggy, and until we had this free fall, which has now just started, and there's not very much zigging or zagging at all since we fell down from the top at around 115. And you can see since then, and that was really November last year, it's been one way down. none of this sort of thing that we've seen in the dollar index personality over history. So it needs a zag or a zig, and that's what we're waiting for. This is a very, very key number. Yes, we've broken through the trend line. We're below all the moving averages. We're definitely in a downtrend, but this level here at 101.90, 101.50, you can see is key support there. It's the 50% retracement, a very significant Fibonacci number. And if you have a look at where we are today, if we zoom in, we're just above it, not very far at all. I expect that we might touch it, push through perhaps, and then move back up again. That'll be the time to start buying dollars again, selling euro, selling pounds, selling Japanese yen, and all the rest of it. So wait for that little test of that level, which is at 101.50, let's call it. It's actually 59, but we'll go with 50. Actually, if I move this red line out of the way, we might find it's actually exactly 101.50. And we're now at 101.90. So 40 pips in currency terms, 40 pips away. Expect the currencies to move up 40 pips from where they are right now when you receive this video, perhaps 50, perhaps 60, perhaps 70 pips, and look for reversal candles, because we'll be looking for euro, pound, etc. to move down and the dollar to move up. And it could be a 5% move, which is 500 pips on the currency market. So significant. And I am a little hoarse this morning because I've just, again, woken up because I've been working late at night trying to figure out what's going on with these markets. Now, that's the dollar index. So you know what to do. Is it going to be free fall Friday? Perhaps not at the beginning. Perhaps the European session and early New York session needs the dollar index to move down just a wee bit and then reverse. And when that happens, we might see stock markets begin to fall down, and euro, pound, yen, CAD, Aussie dollar, all the rest of them, which we'll have a look right now. And they're on this chart. Here's the euro. It's a significant number that we're at right now, 100 and, well, just below 109, 1.09 rather. That's the euro. I think 1.09 is pretty tempting, probably 1.0920, and just above there is 1.0950, which is also a key Fibonacci level. If you have a look back here, it's the 50% retracement as well from the entire move down from the top. So 1.0950, perhaps time to start looking to sell the euro then, and that should coincide with when the dollar index hits its Fibonacci retracement level at 101.50. So look for that perhaps during the day. I'm hoping for a free fall Friday, and we'll see what happens. The same thing applies to the pound, although the pound, I think we could stop right here. Doesn't mean that all these currencies will be totally in sync with the dollar index, because each one contributes differently. The euro contributes towards the index more than the pound, and contributes more to the index than the yen. The yen contributes more than the pound, and so on. So the pound might actually have reached its zenith already. This is a really important level. So we're at 1.22, big round number. I love round numbers in currencies because often markets react to them. Most of the time we'll fall short of them or pop through them. So the actual round number itself, whilst it's a price magnet, doesn't always provide the exact point of turning on the markets, but it acts as the area. So, and take 20 or 20 points below, 20 points above as a rule of thumb, the 20s and the 80s, as I try to unravel my tongue twist early in this morning. The 80s and the 20s are good numbers no matter what charts you're looking at or what instruments. Bear that in mind as a little tip. But we could get up to 1.23. That's the very top of this move. Having said that, I think we don't need to test the very top. We've got this line here, this green line at 1.22, which is probably a better representation of where this resistance lies. We've just entered a short position on the pound. We'll be looking to sell the euro later in the day. We'll give the pound the first bite at the cherry. We'll give the euro a go at it later on, perhaps, and then see what happens. Euro CAD, same thing. I'm going to be looking to sell this again. It's been frustrating. We've got to get rid of these lines now. These are the flag lines that have not worked out. We've actually broken out of there. But once again, we've got beautiful resistance just at the point that we're at now at 1.4520. Euro CAD's a good one to look to sell as well. If the euro and the pound and everything falls down, along with the dollar index rising, often the euro and the pound will fall quicker than the CAD will, so we'll get a move down in the euro CAD as well as the euro dollar. I'm not going to talk about all the other CAD and dollar crosses right now. And then when it comes to the yen crosses, remember we said yesterday this is our favorite, Aussie yen. We've just taken another short position on this. We made a good whack of money out of this yesterday, falling down off this top level here. We sold, waited for a bounce, resold, waited for a bounce, resold, and went through the day like that, selling this move multiple times, taking profit at the bottoms, waiting for a retracement, getting back in, taking profit, waiting for a retracement, getting back in, and so on, rinse and repeat all the way down. And now we're short again. I'm still thinking we can move down to 88 to 87.50, perhaps even today. And along with that, the reason I think that's going to happen is because the dollar yen has actually broken support. I was hoping for this to rally back up into resistance. It hasn't done so. It's actually rather just kept the staggered downward pattern, which I spoke about in yesterday's video. We've now broken and closed beneath daily support on the dollar yen, and we should see the dollar yen begin to move down towards, I don't know, 126, 127, which will drag Aussie yen and Euro yen and all the other yen pairs along with it as it goes, because it's the biggest influence in the yen cross market. Have a fantastic day. That's our strategy. We're short Aussie yen, we're short pound, we'll be looking to sell euros, and I'm short across the board on stock indices. And we'll speak later.